Saturday, April 11th, 3:26 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We are approaching the pending event for this month, FOMC. That's when the U.S. Central Bank meets and votes on the interest rates, short-term interest rates. But also this month, we've just started the second quarter of the year, first month. So we have many companies releasing earnings this month. In the next few days, we'll have the big banks such as JP Morgan release their earnings. I want to go look at the markets, the broad markets. That's more than just the stock market. This is a line chart. 5 years of history, the S&P 500. We're below the highs of the year, as you can see on the far right. The current trend is, as you see, below, again, the highs of the year. This is the 10-year yield, U.S. Treasury yield. 10-year yield is correlated to the 10-year mortgages. The mortgages has a big impact on the stock market. So you can see the history, the bottom left, and where we are now. We're in a tight consolidation the past few years. Past few months, sorry. And the US dollar index. Yep. From the highs, we're still trending now. All three of these have overlap. The US stock market, other countries, other businesses from abroad, and the citizens that want to participate in the US stock market convert their currency into US dollars to buy US stocks. As well, they convert their currencies to US dollars to buy US treasuries, US treasury yields, different durations. I'm just showing here 1 to 10. We sell US treasuries to raise capital. The United States sells US treasuries to raise capital to fund the federal government because we don't raise enough in tax revenues for individuals and corporate. So we sell our debt. People are willing to buy our debt and earn interest on it. Looking here, how much has the U.S. government spent this year? Over $3.65 trillion for this year. Again, we are only starting the second quarter of the year. And look how much we already spent, over $3 trillion. Wow. So compare this to last year. $84 billion more than last year. Yeah, 2%. $84 billion more than last year. Again, that's just year to date. Wow, that's not good. Return on investment. What do you think we're getting in return on investment? Other than, again, operating the government at the current methodology we do. When I say that, it's very broad. We're not just funding military industrial. People might mislead you to think it's not the largest percentage of the money spent compared to the prior years. It's actually smaller. It's the population that grew bigger, so we have more money that's going to fund the Medicare, Medicaid, unemployment. Let's continue. To the next. This is showing countries purchased U.S. Treasuries. From the January 1st data, this column here in the middle, the first country that ranks buying the most U.S. debt, Japan. Now, again, there are not just countries, there are individuals that buy U.S. Treasuries. There are financial institutions that buy, banks buy U.S. debt, mutual funds. So again, very broad who buys U.S. Treasury debt. This, again, it's just showing the other countries. If you don't know, the U.S. Social Security Department that collects money out of taxable income to fund Social Security, they buy U.S. Treasuries too and earn interest on that. But again, I'm just showing here the countries. There are bigger entities than just these countries that buy it. So Japan being number one. They increase their purchase than the prior month of December. Second largest participant, United Kingdom. They increase their purchase from last year. And the third being China mainland. If you don't know what China mainland is, China claims Taiwan. Well, Taiwan is not mainland. So again, China mainland, the third largest purchaser. They increased theirs from last year. Now, these rotated years ago, not too long ago, several years ago. China used to be number one, and they reduced. They wanted to diversify their portfolios and hold less in their investment portfolios, less U.S. Treasury, and have more other assets. So again, the first being Japan, East Asia. Second, United Kingdom, Europe, Western Europe. China mainland, Asia, East Asia. And then third, Belgium, Western Europe. Luxembourg, Western Europe. Cayman Islands. Okay. The Cayman Islands in the Caribbean. Yeah. So again, that's a lot of people masking their selves and shielding themselves to be on paper as Cayman Islands. There are some countries, there are some businesses, and there's some individuals that don't want on public record that they are participating in buying U.S. Treasuries. So they mask them to corporations. One place is Cayman Islands, another is the Jersey Islands in the English Channel, and other countries. There we go. Canada, North America. Thank goodness our neighbors are friendly to us. France, Western Europe. Ireland, Western Europe. Taiwan. Got a little tiny area of Taiwan is a big participant. Good job out of them. Switzerland. Yep. They too want to be diversified. And Singapore. So Switzerland, Western Europe, Singapore, East Asia, Hong Kong, and East Asia, again, part of mainland China now. Norway, Western Europe, India, East Asia, Brazil, South America, South Korea, East Asia, Saudi Arabia, Western Asia, Middle East, Israel, Western Asian, Middle East. So it's very diversified who owns U.S. Treasuries, U.S. debt, and these numbers change. They are. Interesting. Okay, let's continue. The federal FOMC meeting this month, 29 April. That'll be Wednesday afternoon. So here we're looking at the data of the current market sentiment. Again, the Federal Reserve has a target rate between 350 to 375. 97.9% speculating to be unchanged. Okay, they expect the rates not to be changed, left unchanged. Then we have another meeting, 17 June. Target rating the same, 350, 375. Majority anticipating it be unchanged. 29, July. Same target, 350, 375, but less of them, but still the majority. I believe it's going to be left to change. 16 September, majority still anticipated to be left unchanged. 28 October, majority still expected to be unchanged. I just want to show the rest of this year. And the last FOMC meeting for this year, December 9th, 71% expect to be unchanged, with the largest increase going to speculating the rate to change is just shy of 25%. So they are speculating in December, the increase, again, the majority not, but the second biggest is they anticipate it to be lower the rates. Yeah, a lot of things could occur between now and then. U.S. Treasury Department. Regular business hours, they auction off the debt, the treasuries. So I want to show you how we're currently doing. First, left to right, horizontal. First trading day of this year, January 2nd. So look at the far right column. We're going to look at the 30-year. The 30-year, those yields were going for 486. On the close of this past Friday, see on the far left calendar day, they went up. So they closed, they were auctioning them off at 491. First, January 2nd, 486. Wow. Let's go to the 10-year. January 2nd, 419. And they raised them. Friday, 431. Let's look at the 1 year. So if you purchase the 1 year, first trading day of this year, the 12-month 1 year U.S. Treasury, you'd be earning 3.47 on the yield. If you participated again or your first time this Friday, look at that, 3.70. And let's go look at two more. Let's look at the 3-month, 365, 369, not a big change, but still went up higher for the 3-month. And we'll look at the last one, the 1 month, 3.72, 3.67. So as these yields go higher, interest rates go higher, the Federal Reserve, U.S. taxpayers are paying higher interest on the current debt than we did on the first business day of this year. Again, I showed you record spending increased. We are only paying interest on the U.S. debt. That's it. That's amazing. That's shameful. Let's continue. If you buy a 30-year mortgage, far right shows the high and low of the year. So currently it's at 6.39. 15-year mortgage, 5.99. And then the FHA, 5.91, jumbo. And the veterans, 5.93. Glory to our veterans. Yep. So again, you see the range from the high and low. Historically, we're still below the highs, which I remember when they were in the over 10% for mortgages. Again, the property values didn't cost as much. So property value is higher now. Mortgage payments are higher because the value of the property is higher. But again, sure, lower interest rates, your mortgage would be lower. If you put more money down, your mortgage would be lower. If you live within your means, you'd be smaller mortgage. Credit card interest rates. So back on 311, let me see if this is current. It might not have changed it. Nope. Yeah. So credit card interest rates back on 4.8. It was reported as 19.58. That's terrible. That's extremely high. Yeah. Again, go back on the beginning of the year, January 7th, reported 1965. So the credit card rates are actually a little bit lower. Still extremely high. Yeah, not good. And I want to take us to bankruptcies. So I'll show you some history. I'm in the state of Florida. In the state of Florida, we have 3 districts for the federal government for the court system. Southern District of Florida, that's southeast, the biggest part being Miami. The North District of Florida, the biggest being Tallahassee. And the Middle District, the largest being Tampa. Again, those are the headquarters of the 3 districts. And again, within those each districts, there's many other cities and counties. Well, the United States bankruptcy courts for the Middle District of Florida is the 3rd busiest bankruptcy court of the 90 federal districts in the nation. So again, the United States has 90 federal districts, courts. And the Middle District, which is this one, comprised of all these counties here, this whole green area from Jacksonville, Florida, to past South Fort Myers. This is the 3rd largest bankruptcy district in the United States. Florida making itself proud. Wow. Again, this data changes, but that's how current situation is now. So I'm in the Middle District of Florida. I'm going to click on current data from February. Here we are, February. 3 big areas: Jacksonville, Orlando, Tampa, Fort Myers. The current month, look at the districts total. So again, the Middle District of Florida. Bankruptcies have increased from the prior year. And then each of those major cities, they have increased. Tampa being the largest, 2nd Orlando, 3rd Jacksonville. Based on this information I just showed you, and the data, the big concern is, I mentioned, we're coming into earnings. How do you expect these earnings to be for this month? Well, if you continue the momentum, if you speculate the market's going to continue, then maybe you want to be invested in fixed income products, which are money markets, CDs, treasuries, stocks that pay high dividends. Just some insight. But there's opportunities in currencies. There's opportunities in commodities and sector stocks. Thank you, as always, spending just a little time with me. That's it for the video. Thanks for watching.